Dangote Cement is a subsidiary of Dangote Industries Limited, founded in 2010, operating in 13 countries in Africa, with a sales of over 2.7 billion naira. Its mission is to produce cement for Nigeria and Africa to be self-sufficient. In terms of strategy, I mean, it's started in Benue State, where he has some plants across Nigeria. He has Obajana in Kogi State, and then Boko in Benue State, and then in Ogun State as well. Now, in Africa, yeah, he operates in 13 countries. It's a 25 billion cap company with current about 50 million, tons of cement production, owned essentially mainly by the Aliko Dangote. Its business model essentially is to display imported relatively low quality cement at high prices, create value for its customers by emphasizing high quality products, effective distribution and delivery process, and dominance of its category, and close government engagements. Um, it drives its value from location, setup cost, extensive distribution networks, and lower energy cost. Uh, a critical success factor for it is it leverages indigenous status and close engagement with the political class to grow its status, its business, close relationship with off-takers, particularly those downlines who buy their products, and also emphasize a lot of quality when it goes into. Now, in terms of its strategy for domestic and international business, is shaped in by the culture, the administration, geography, and economics of the respective country it operates in, using the same business model and strategy that I've discussed earlier on. So the differences you see, basically, the same structure of the strategy, and it changes depending on the culture, administration, geography, and economics of that particular country. Now, its first foray into outside Nigeria was somewhere in Togo, where it found out that we had the French connection, and the French were a little bit difficult in terms of opening up the market. The business model wasn't good, so they took a decision not to go in there. Now they learned a lot from the experience in Togo. That there's a market that exists, but it's operated by highly inefficient operators. The business model for such were designed to create jobs and not to make profit. The cost of the investments were far beyond what the cost of taking on buying that particular investment. Building a new factory was a bit better, a lot better, cheaper, and produce more than buying that particular. They also learned not to do a joint venture because they saw that it would be a little bit of a tricky environment for them to play. New investments were so expensive that it didn't make sense for them to. So they now decided that wherever they're going to in Africa, they want to go it alone. They evaluated both advantages and advantages of JV structure, and they came clearly based on their own understanding of what JV is that they will want to go completely independent without taking in orders. So their strategy is informed by the experience in Togo, lack of credible partners in Africa, and then they spend too much time trying to forge unity rather than focus on the market, which is and then it will dilute their policy. The one critical success factor, part of their business strategy is close relation with the political and then political and the regulatory authorities, which they felt they would lose if they go into an alliance with JV alliance with anybody. So in Africa, all the 13 countries they've been to, they want to be independent. Now, looking at what business philosophy we want to discuss here, I would like to talk about the tax environment. Now, Dangote has been paying, you pay the corporate tax of about $250 million, which is about in Nigerian naira terms about 97 billion for the financial year ended 2020. And then, according to according to the sources of the Nigerian Stock Exchange. What they paid in 2019 was 125 billion. Now, if you look at the trajectory, in 2016 they paid 28.2, and then 2017 they paid 284, and then 2018 they got a tax credit of 298 million. Now, if you look at the tax strategy, Dangote Cement paid less tax in 2018 than it paid in 2020. Paid more tax in 2018 than they paid in 2020 in dollar terms. In dollar terms, they paid 298 in 2018 and paid 250 in 2020. Why the decrease when profits have actually gone up? The decreasing tax liability a result of course, depreciation of African currencies relative to the dollar, and then tax credits they gained from pioneer status and investment credits from infrastructure payment. In the pioneer tax credits in 2018, they got a credit of about $298 million, which will reduce the tax burden for the next 5 years, and a further about 56 billion for investments in specific infrastructure, for which they got tax credit from the Nigerian tax authorities. And of course, the depreciation of the naira or African currencies in the region of about 35% since 2018. So, in a nutshell, Dangote Cement is an African-focused cement producer, world-class standards, makes about $2.7 billion million in terms of sales, makes about $750 million after tax, and then pays about $250 million of that tax to Nigerian. So for Nigerian, in Nigerian context, it's a strong company. They continue to learn from their foray into Togo, for which they've informed all their actions thereafter. So they continue to be a low-cost producer, good quality products. They locate their factories near limestones. They have extensive distribution networks. And then, they benefit from the indigenous policy. Being African, they push the agenda that, they are with the people, they want the government. They want to support the government, and they pay their taxes as and when due. They access high quality, factories from China. I mean, world-class factories, but at cheaper entry cost. They do not do any JV. And then they do extensive tax management to improve shareholder value. So, that is Dangote for you. Thank you.